Good evening, people. Welcome back to Cruising on Crypto. I am Craig. So we got one hell of an episode here. Lots of fireworks, lots of anger against certain YouTube influencers. More than one YouTube influencer, but one in particular, Ben from BitBoy Crypto, kind of flipped the script and called out a bloody weekend ahead and decided to liquidate $2 million of his cryptocurrencies without mentioning anything to his viewers, who just earlier that day had said it's bullish, buy opportunity. This is no way this is the top of the bull market. And then Saturday morning came out with one of those videos he makes with just recording himself with his phone. No charts, no nothing, just straight talk, I guess, saying, oh yeah, guys, by the way, I think this weekend's going to be bloody and terrible. So I've liquidated $2 million of my portfolio in altcoins. And I saw the comments on that video and it was anger, mostly because the day before, he'd done 2 or 3 episodes, one of them live, so it's not like he pre-recorded it where he could have said something a day earlier where he didn't still believe in, but he did live episodes where he was saying, there's no way this is the top of the market. And he was showing things like this. The thing I've been showing you for a while where, you see how the peaks look on the other ends of bull markets where it's very, there's the exuberance, the spike up, the volume goes through the roof, and then our most recent pullback looks like this. This is not a top. The volume's not there. This is not exuberance. This is not everybody FOMOing in. This is what has happened every bull market, both 2013 and the 2017 4-year cycles. Both of them had mid-cycle pullbacks. In 2017, it was like 40, 41%. In 2013, it was 80, something like 80 or 82%. So this being 50% wasn't even the biggest pullback mid-cycle of a bull market. So here, many of the YouTube influencers were saying, no way this is the top. This is just a pullback. It's a great buying opportunity. Don't miss out. No such thing as a bad buying opportunity, blah, blah, blah. Take advantage. So I was also caught off guard when I saw the Saturday morning episode where he said, yeah, I sold $2 million of my altcoins without any forewarning. Yeah, he has the right to do that. It's his money. But as a YouTube influencer, I can understand the anger he was getting because people felt like he was saying, buy the dip. This is a great opportunity. And people probably followed him and bought and maxed out their investments thinking this is the greatest buy opportunity ever, only to find out their leader, the one they're following, sold overnight or the day before and came out Saturday morning saying what he'd done. Granted, he says it was only the small altcoins that nobody seems to care about, which I'm sure somebody out there cares about these smaller altcoins. And he said it was only 12% of his portfolio. So I get Ben's point. He has the right to do what he wants with his money. He lost, at one point he said he lost $10 million in the crypto crash. He didn't probably want to lose another $10 million. But you got to understand the public's perspective too. You can't come out in your live episodes saying, buy. This is a great opportunity. We're all going to be rich if we take advantage of this. And then sell secretly and then tell people afterwards. So he got lambasted in that episode. Today when I was at work, I had a lunch break and I decided to check out his live episode today to see if he had any thoughts on how there was no Bloody Sunday. And going back to this, in case you weren't aware, there was no Bloody Sunday. And now here it is Monday after 6 p.m. and the markets are still looking good. I'll show you the charts in a second. But yeah, his live episode was a bloodbath in the terms of everybody in the comments was just so venomous towards him. So yeah, he's got a little bit of, he should go on the apology tour for how it went down, but didn't look like in that episode that was going to happen. He was actually quite angry that he was being called out for his decision, but it is what it is. You're a YouTube influencer. You need to forewarn your viewers. And this is what I've been saying. I've been saying for every episode that I forecast this top coming in the September, October, maybe a little bit later because this pullback is so deep, it might take a while to build back up. Maybe we're getting into late, November, December. And some people believe even said this might even go into the first couple of months of 2022. Long and short though, I've always said, when I get to the top, in fact, I made an episode going what to do in a bear market. And I said, when I get up there and I see that toppy, pointy peaks and the high volume and everybody's FOMOing in, when there's blood in the streets is the time to buy. And when everybody's barreling in, it's probably time to think about selling. And I will be selling, but I will not spring it on people. I won't be pounding the table on an episode that this is the best bull market ever, and then come out the next day and go, yeah, yesterday I liquidated, even if it was just 12%. You've got to say, guys, I'm thinking of lightening up here. This is looking pretty toppy. I'm thinking of lightening up. In fact, if it falls below, throw a line in the sand. If it falls below this level, I'm thinking we're into a bear market. And, then people go, well, he warned us. So so that way you don't get this much venom. I don't want to see that much venom in my comments ever, but it is what it is. So that's what the fireworks of the weekend was. And I can guarantee at this point, because Monday's almost over, that the Bloody Sunday / Holiday Monday never happened. And we've actually got some very bullish charts to show you. So let's get into those. All right. First off, as always, Bitcoin, because it is the tide that lifts all boats. And as you can see, we're on the 4-hour here. This is the recent pattern. This was the low. We were supposed to get a lower low, blood in the streets. Never happened. We've been getting higher lows, but also lower highs. So we're getting into a wedge pattern. And that's actually good, because when we break out, and I believe we will break out to the upside, all this pressure coiling it together is going to make it pop like a spring. And I believe we're going to hit, we're going to go up towards this Fibonacci resistance level of around $43,500. And a lot of people have been using the line in the sand that 42,000 is the line, that if we can get above 40 to 42,000, then we're definitely back into a bullish phase and, better and brighter things ahead. If you look at it from, if I zoom out a bit, you can see this was quite a nasty pullback, but we've got a long way to go just to get back to our old time highs. And then, as we've shown you here, once we get past our all-time highs, we got a long way to go to get to what is our ultimate high, which we are forecasting to be around, well, anywhere between 100,000, which I think is very low, it's down here, or 300,000. So there you go. Let's get on to Binance. This is my biggest position. It shows similar to Bitcoin. Like most of the coins are going to have a very similar looking pattern. This was the big drop off on the 4-hour chart. We're in a wedge pattern. We hit the low back on the 23rd, and we've been going up ever since then. But also the highs aren't getting as high, so it's not a channel upward. It's kind of a wedge pattern. But when we do break out, we're probably going to go back to, I don't know, at least to the 445, 450, 500's the next one, 580's the next one. So as you can see, we got a few levels. When you've dropped this far, you've got a few resistance levels on the way back up. So, but I mean, it is, in my mind, looking very bullish. Also, you can see things like the MACD is now turning up again. The RSI is not overbought yet. So there's a few other factors. You can look at the, oh, I'm in the way. Well, take my word for it. The MACD and the RSI. I don't want to keep this going on too long, so I'm going to go on to the other charts, even if I am blocking the bottom right corner of the screen. So next one is VeChain. So we're on the 1 hour here. Let me go back to the 4. So we were looking at the 4 on the other one. VeChain didn't seem to fall as steeply as the other coins, but it's got that same wedge pattern. Oh, in fact, if you zoom in here, actually, let's go to the 1 hour. It looks like we are actually breaking out from this wedge pattern right now. Even if I brought the wedge down, the line down here to touch these a little bit more, we've definitely broken above it. So that is bullish. But yeah, the next resistance is probably back up here, about $1.57. That's looking sweet. Let's get on to the next one. This is Cardano. Again, this one's breaking out too. Sweet. All right, let's go back on the hour on that one. Same thing, compression, lower highs, higher lows, but we just started breaking out. Maybe by the time I'm done recording and editing this, we're going to be full-fledged, broken all these lines on every one. So this was Solana. I didn't draw the wedge on this one, but you can see this one's been very bullish. We're already through all the Fibonacci resistance levels of here, here, and here. And now we got nothing stopping us other than getting right up to the old recent high of around $37.50. And then, of course, like everything, you go to the 4 hour and you realize we got a ways to go to get to the old, recent highs. But yeah, we break this bullish pattern. And again, let me move this over this time so you can actually see it. MACD trending up, RSI is not overbought yet. So I think we have the ability to get up to this recent high before this tops out. Then we'll probably roll over, maybe hit a resistance line on the way back down before finally going up further. And Matic, last but not least, again, this is on the 1 hour, so we'll zoom in. You can see this one, this wedge has really almost come to an end. It's got to break one way or the other, and it looks like it's breaking to the upside. And one of my favorites is Cake, Pancake Swap. It's the biggest AMM on the Binance Smart Chain, and I've got a bunch of it, and I just thought I'd show it to you. It's the same thing. It hasn't broken this upper line yet, but they're all looking very bullish. They're all looking like if they're going to break one way or the other, it's to the upside. So let's get into the bullish news of the day. First of all, this is something we've been talking about. It's the Bitcoin accumulation uptrend can create the 2013 style BTC price double pump. So we talked about the 2013, how is that big mid-cycle, mid-bull cycle pullback, and this is saying the same thing. This is the graph you really want to see, but I'll zoom into that in a second. Just wants to show you that shows the Bitcoin collecting spree among miners. So this is the part I'll give you a chance to read before I pull this graph up and make it a little bigger. But what they're generally saying is, this line here is Joe Schmo Public. This is the short-term holders. And this is the miners, this yellow line, and this is the long-term holders here. So let me zoom in on that just to get a bit bigger perspective of it. So as you can see, during this recent pullback, this is the price here, the number of short-term holders of Bitcoin they've been liquidating, they've been selling. At the exact same time, the green line is the whales, long-term holders with large amounts of Bitcoin, have been accumulating as the price has been going down. And the miners who were selling like crazy when the price first got up here, they were, they liquidated a lot, pay the bills, so to speak. But as the price got here and it sort of consolidated, they started seeing the writing on the wall that there was going to be a bigger upside, and it makes more sense to hold these newly minted Bitcoin than to sell it. And then when things fell, they actually started to speed up how much of the Bitcoin they were actually putting in their inventory versus selling. So the only people selling during this downward crash were the short-term holders. So that's not surprising. That's what we've been saying, that the FUD that the whales were putting out was spooking the small-time investor and making them liquidate while these whales were accumulating. The volatility index on Bitcoin has been coming down over the last, since I guess around the 20th, it was at a high, and ever since then, it's been coming down. Volatility is usually kind of correlated with fear, so the fear is coming down. More and more people, whales, miners, and Joe Public, have all started to feel a little less scared. So the volatility's come down. Ben's not less scared, or wasn't less scared, but generally overall, everybody else was actually less scared as the price fell drastically. And this is just showing you that this bull market could be very similar to the 2013 bull market. See, the 2017 bull market, this is sort of like an overbought, oversold thing. It's not called that, but generally that's what it's trying to tell you. You can read the text around it. But usually what happens is it gets kind of overbought, and on the way back down, when it crosses here, that's when we're going into a bear market. Look at 2013 though. It went up, this spike in price, it made this become kind of overbought. It touched the, oh my goodness, we're going into a bear market, spooked people, and then went back up again. And we had this second wave of the bull market that went to all-time highs. And that's what we're thinking. I'm thinking, many other people are thinking it's going to happen again. We're going to go back into a bull market. So this is going to be a double dip like this, as opposed to one single rounded top like this. So there you go. That's just something of interest. And they're saying here that Bitcoin is more macroeconomically bullish because of the fiscal irresponsibility of the government these days. It's just mind-blowing to me how much money the US government is printing. Now, I'm not an American, but if the US catches a cold, Canada catches a flu, because we're so closely tied to them. So we do have a vested interest in not watching the US print themselves into oblivion, because if their economy crashes, well, ours isn't soon, far behind. So they're saying one thing that's making people more bullish and more willing to hold their Bitcoin and be those long-term hodlers is, where else are you going to put your money? I mean, they're printing money hand over fist. That is going to come out with massive inflation. They hide the inflation by faking the numbers. They take out things like food and energy, things they know are going to show the inflation. They take things like TV sets and electronics and put a PCE deflator on it, meaning you buy a TV next year, it's got more features or more resolution than last year's or 5 years ago. So they say that TV's worth more, even though the price has gone up slightly, they say it's way more TV for the same dollar. So they consider that deflationary, subtracting. And Shadow Stats, if you're curious, go there. If they took inflation the way it really is supposed to be, where they include everything and they don't play these monkey games, inflation is anywhere, used to be called, they used to say 10%, but as inflation has been more apparent in the government inflation rate, they're now saying it's closer to 12% inflation is the real inflation rate. When you factor in everything a household would need to buy, we're talking food, energy, taxes, everything else they got to pay is going up. So you got to factor that in. So it's not fair that the government doesn't count those things just because they want to pretend the number's lower. So you got these crazy deficits. Right now, the Federal Reserve, federal debt, just the federal, not the state debt, not the corporate debt, just the federal debt is around $29 trillion. And Biden just announced there's going to be a $6 trillion stimulus plan, another one. This is for infrastructure, he calls it. $6 trillion this year, and the same, and then more every year. And it's going up every year to the point where it's $8.2 trillion by 2031. Is that insane? Does anybody else think that this guy, take the credit card away from Mr. Biden, please? Because they're just, I don't even know where they think they're going with this. And the thing is, it's getting to the point now that the federal US government is not going to be able to even afford the interest rates unless the Federal Reserve keeps the interest rates at zero. Or even there's some rumors they might go negative, like some European countries are, just to help the government not have to pay for the debt. The debt would, in essence, then go down, even with no payments being done. But how many other world countries are going to invest in U.S. government bonds if they get next to no interest or negative interest? I mean, zero. And then the only people going to be buying those bonds are going to be the Federal Reserve, who in essence prints money just to buy the bonds. It is just a Ponzi scheme on top of a Ponzi scheme. It's a huge house of cards. It's going to come crashing down, and there's going to be out of control inflation. So this is just saying that because of that, it's fostered this surge in Bitcoin and other cryptocurrencies, because most cryptocurrencies are deflationary. You know, things like Binance and other coins, when they have an operating business with a profit, they're actually taking their profits and buying back their coins and burning them, which means the number of outstanding coins constantly goes down, making it deflationary. But even if you got a coin like Bitcoin that isn't deflationary, it is inflationary because there's still new coins being minted, but there is a cap of 28 million coins. So there's none of this unlimited printing like fiat currency. So people are starting to say, you know, corporations, high net worth people are going, I got to get the hell out of fiat currency because they're going to print this thing into oblivion. It's not going to be worth the paper that it's printed on soon. And when people start waking up to the fact of the crazy inflation, there's going to be social unrest when people's paychecks aren't going up, but everything they got to buy is going up in leaps and bounds. So they're piling their money into gold, silver, cryptocurrencies, anything that's an asset that's not fiat. Now, of course, you could include the stock markets in there. That's why the stock market's at all-time highs, even when there's no reason for it to be at all-time highs. It's because of the constant money printing. Real estate, we've all seen how crazy the real estate prices are. That's because money's got to go somewhere and people want to put it into an asset. Well, they're putting it into homes. The problem is homes are now so expensive that the average family can't afford to buy one. So if they've got one already, great. But if you're living in an apartment thinking of getting your first home, good luck. Because I know what it's like around here in Ottawa. Prices have probably doubled in the last few years. And I just don't even know. I couldn't afford to live in the house I live in now if I didn't already own it. So, and that's going like that everywhere. So that's pretty much this whole article, just saying there's a lot of macroeconomic reasons why it's a bullish time in cryptocurrencies again. This is a similar article just saying that there's 3 on-chain indicators suggesting that Bitcoin price sell-off that we've just seen is losing steam. Again, I'll let you read most of this on your own, but it's saying similar stuff to the other article. It's just saying that these graphs from Glassnode are saying that more and more people are hodling Bitcoin, stacking them, especially high net worth whales and whatnot. And that's just the way things are and the way things are probably going to be for a long time. They're also saying that the on-chain data shows that exchanges are seeing a decline in the amount of Bitcoin and other cryptocurrencies that are remaining on the exchange. It means they're all going to either they're getting put out to farm for a yield or they're getting put into cold storage wallets. But the long and short is that's a bullish sign. If coins are coming off the exchanges, that means that people are not planning to sell them anytime soon. And then this graph is sort of reiterating what I was just saying. This chart shows that the amount of selling that came from people was mostly from people that had had their Bitcoin for between 1 day and a week. That's, I mean, really short term. So these are people that just got in near the top, and then that's the people that panicked when it started falling because they were losing, their cost for each Bitcoin was like $55,000, $65,000, somewhere in there. And then when things started falling, they panicked. And yet, meanwhile, the amount of wallets that were building Bitcoin, that were people that had their Bitcoin for 1 to 6 months, was going up. So short-term holders were selling, long-term holders or hodlers were buying. So it's just the same as what we've been seeing before in the other articles. I didn't get a chance earlier to show you the crypto market cap 24-hour, but if you look down here, it's all green. But I want to mention one in particular, and that's XRP. It's up 11.51%. It's not as high as I thought. Earlier today, it was up higher than most of the other coins hadn't started rising yet, and it rose first. And that was because of this good news article for all the Ripple people out there. The court is not exactly helping the SEC here. They've denied the SEC's access to Ripple's legal advice. So this has just kind of been foreshadowed for a while. The court has been making it relatively clear that they're not happy with how the SEC went after Ripple, saying that it's an asset. It's, why did they pick on just this one cryptocurrency when a lot of other ones are in the same boat? It just feels like it was punitive. They just picked somebody for whatever reason. It was Ripple, and they went after them. And the court has pretty much said numerous times that they don't agree that there's anything going on that's untoward, so to speak. So that's why Ripple is up. Let's just take a quick look at my altcoins. You can see it's been a nice 24 hours where everything's slowly going up, and that's good. But we also want to look at the market cap. So this is, of course, by market cap order. We can go by 24-hour as well. But as you can see, there's not too many things with a red. Let's find a red here. Bakery token, for some reason, 0.5% down, but almost everything is up. When we go to 24-hour, I don't have Chainlink right now. I've been thinking about getting it. I got VeChain, I got Solana, PancakeSwap. I use XRP a lot to transfer dollar values between wallets because it's cheap and easy to use, but I haven't actually been buying Ripple to hold. I guess after this new SEC slapdown, maybe it's time to get some Ripple and actually hold it for the long run. Polkadot's doing well. Polkadot, have you been finding this as well? Polkadot sort of lost its mojo there for a while. As you can see, some of the other ones, over the last week have been doing pretty well. Polkadot lately has been kind of lagging the other altcoins, not really being an overachiever, but there's got to be some good. They got the new parachains coming out and all that. There's some good news on the horizon, so hopefully Polkadot will come back. Ethereum done well today as well. Really, it's hard to find a loser in here. So let's just wrap it up with that. I don't want to keep this going too long. But all that to say that the Bloody Sunday, the long weekend of death and destruction for the cryptocurrencies never happened. Poor Ben gets slapped around for calling out a Bloody Sunday when it never happened. These things happen. Like I said, I don't blame Ben for selling. I'm going to sell at some point in the future as well. I'll definitely try and give people a heads up that I'm planning to lighten up the load before I sell, because I do not want to get slapped around in the comments like poor old Ben did. So anyways, hopefully you found this entertaining and informative, feeling a little more uplifted about the bullish sentiment that I believe is coming, and that we should be able to slowly march our way through those resistance levels back up to our old, more recent highs first. Let's just get to those levels. The Bitcoin 65,000 would be nice. And then we'll try and get to those 100,000, 200,000, maybe 300,000 by the fall. If everything goes well, if we don't have any more Elon Musk negative tweets or anything weird blowing our market apart, if that doesn't happen, I think we've got a pretty bullish rest of the summer into the fall. So hopefully you agree. If so, put some comments down below what you think, whether Ben was overly harshly chastised for the way he decided to sell his stuff, or whether he deserved the ridicule and abuse he got in his comments. Oh my God, he must be having a bad day. Anyways, hopefully you found this informative or entertaining. If so, show the channel some love by giving it a thumbs up. Subscribe if you haven't already. Hit that bell notification, because that way you'll know when I'm putting out a new episode. And until next time, this is Craig wishing you happiness, health, and wealth. In that order, ciao for now.